What's up, guys? Ali here. I've been trading for about 8 years now, right? And I've been making videos for about 3, 4, 5 years. And at this time, I feel like I've pretty much perfected my trading strategies and automated my trading. So I don't even look at my trading anymore. Like, as in, when the market opens, I'm not even trading. And this is my trade, actually, from this Friday, February 14th. Literally bottom ticked it right here and then sold, and it was all automatic due to my I would say a proprietary bracket order trading strategy where because of my experience of finding great levels, I put my orders, buy orders, stop orders, and limit sell orders before the market open, and then I walk away. The stock usually come down to those prices, fills me up, like here you see it fills me up, and then I have profit targets all the way as well, and I take profit and I just come back with profits in my account. And it could be from like 500 to like $2,000-3,000 a day, more even, depending how much risking you're. It means sky is the limit, obviously. But what I want to talk about is one of my strategies that's working really well, specifically this one, why I bought here, sold here, and it was all automatic. So if you are working, if you have a full-time job, this is an amazing passive income strategy, which is day trading. I mean, these are better trades than day traders. If I was watching and trading this stock, I wouldn't have taken this better of a trade with a perfect entry, with the perfect sell on top and perfect at the bottom. So I mean, if you're working, if you have a full-time job and you really love trading and how to balance it, this is a great way. I honestly traded full-time before, back in 2021, 2022, and my trading is way better than now when I'm not even watching the trades and getting auto fills and auto sells. So I think this helps me a lot better, keeping my emotions in check as well. And also, like, I don't overtrade anymore, because I'm not, if it comes to my order, if it comes to my entry, let's say if I have my order sitting right here, and if it doesn't come and it keeps going, I'm not going to get filled. So I'm not going to chase the stock. If I was watching it, I'm not going to chase it. And let's say if I was watching this stock, I probably would have bought way higher, thinking that it might not come back all the way down right here. So like, basically, I stick to my plan. That's what I'm trying to tell you. So that being said, let's look at this strategy, which is the gap fill strategy. So this is the chart of Nvidia. Basically, this Friday, February 14th. I literally bottom ticked it right here. Let me open up my pen real quick and show you. So this was the entry right here, and sell was up here on the top. So on the 15-minute chart, this was the entry right here, and the final sell was right here. It was some sell here, and final sell here. Now, obviously, you can hold as well. It works a lot of time, but I take profits in tiers depending on your, where you want to take profits. That's a little different topic for the video, but let's look at the strategy, why I bought right here at the bottom and why I sold right here on the top with my final profit take. And this works really well right now. I mean, it's been working for a really good time. And the way the strategy is the gap fill strategy. What basically happens is that, now let's look at the chart setup. So this is a 30-minute chart. This is a 5-minute chart, and it's a daily chart. So this is my pretty much chart setup. I always look at the daily chart first and see, what the stock is doing on a daily chart, what the momentum is. Clearly, the momentum is on the upward. So you can see the upward trajectory right here. Okay, upward trajectory right here. So it's been uptrending with the gap fill. It's gonna fill a gap. So I know most likely it's very strong right now, when it's Nvidia as well. So it's Nvidia, already a very strong stock. So I am bullish on it, but I'm not gonna just buy the stock anywhere. Second thing is that I'm looking up the pre-market. So this is the pre-market level. Now the stock closed here, and look here, it's opening up and opening up, which is gapping up. Instead of gapping down, it's going up pre-market. So it's strong. Usually what happens is that, so this is the last day area on the 15-minute chart. I don't have any pre-market setup here, so I can see the gap. So notice here what happened. If I draw a line, which is this line, the stock comes down fills this gap and then continues. So whenever the stock is gapping up on a very strong day, previous strong day, the stock is very strong the day before, which it was, you see the day was previously strong, and it's gapping up, usually comes down. The reason why, because a lot of people who shorted the stock, they wake up with even more loss. So as soon as it comes down, they try to cut their losses before it goes up even further. Okay, so it's basically kind of a short squeeze kind of play. And then all you do is you buy. So also look at here on the daily chart, on the 5-minute chart, this is the same level, which is a gap fill, which is also a support level right here. So it's also support, also gap fill, so it's double. So this is where I'm gonna buy, which is the gap fill strategy. So I buy once the stock fills the gap, and your stop loss is either below the pre-market level or this candle, 15-30 minute candle. So this is the same area, so they both align perfectly with this. So this is stop loss. So this is what I'm risking. So I'm risking around this much in my profit target. So I'm risking about like 1 to 2 risk to reward. This is like 1 to 1.5 because I take 25% right here, 25% here, and then rest of the 50% here. In case it goes up and goes down, I still lock in some profit. Okay, so and what you can do is you can even let the 25%, take 75% right here, and then let the 25% runner go. Okay, so the way I do is I put my bracket order, so with a limit order of buy here, with a stop loss here, and then with 1 to 2 risk to reward with my limit order on top, 1 to 1 and then 1 to 2. And this is how I do it. So notice here, the funny part is, you see how I top ticked it. The reason why I top ticked it because everybody else knows. This is a very, very common, very, very big traders, pro traders trade this. That is why I bounced right here. The reason why, because since this is 1 to 1 risk reward, so the pro traders take 1 to 2 risk reward. So it's exactly 1 to 1, and then this is 1 to 2, exact 1 to 2. So if this is like around $1.50, it's $2. And so this is $4 difference. So it's $2 and this is $4. So the difference is exactly the same because they have this order sitting right at 1 to 2 risk to reward. And that is why I am able to a lot of times top tick it before it sells off, and then the buyer step in again because it is overall strong, so the cap keeps going up, which you can buy again, but that's not the strategy that I'm talking about. So I hope you learned something. It's great if you are have a full-time job and want to day trade. In fact, it's better. I would suggest that don't day trade if you're struggling, because it's so hard, especially for new people with no no experience. You're gonna get chopped out. Someone said, one of my good friends said that the market was choppy, and actually market wasn't choppy. It just worked exactly how it is. Okay, and you just think it's just doing up and down above the support, not below the support. So it's not really choppy. You just did not get a fill. So hope you learned something. Let me know if you like this content, and I will make more videos like this. All right, take care. Bye.